If you're receiving stock compensation, whether it's RSUs, stock options, or you're participating in your company's ESPP, you're probably making really good money. But here's the problem. When tax filing season comes around, the paperwork gets confusing fast. And the biggest mistake I see people make, they end up paying taxes twice on the same income because they didn't understand how to handle the basis adjustments. I've been helping clients successfully navigate stock compensation for over 25 years. And in today's video, I'm going to walk you through exactly what documents you need, what deadlines to watch for, and the most common mistakes to avoid so you don't overpay the IRS by thousands of dollars. Let's start with the basics. When do you actually need to have all of your documents ready? Here's what you need to know for 2026. Your W-2 from your employer must be sent to you by January 31st, 2026. That W-2 includes your salary, your bonuses, and a portion of your stock compensation income if you had RSUs vest or sold ESPP shares during 2025. But here's where it gets tricky. Your brokerage firm, whether that's Fidelity or Morgan Stanley, Schwab, E-Trade, they have until mid-February 2026 to get you your 1099-B. That 1099-B reports all the stock sales you made during the year. So now you're not just waiting for one document, you're waiting on multiple documents from multiple sources, and they all arrive at different times. The tax filing deadline is still April 15th, 2026, but if you've got stock compensation, it's perfectly fine, actually it's often smart, to file an extension until October 15th, 2026. That gives you time to make sure everything is reported correctly. But here's the catch. Filing an extension doesn't mean you get to delay paying your taxes. If you owe money, you still need to pay by April 15th to avoid interest and penalties. And those penalties, the underpayment interest rate for the first quarter of 2026 is around 8% annually. That's not a small number. Now let me walk you through what you should be collecting. This is where a lot of people get caught off guard. First, you've got your W-2, simple enough, but then you need your 1099-B from your brokerage firm. Now, depending on which brokerage your company uses, you might also need what's called a supplemental information document. For example, if you're with Morgan Stanley or E-Trade, you'll need to log into your account and download not just the 1099-B, but often a second PDF that says something like Equity Awards Tax Summary or Supplemental Tax Information. This document has critical details about your cost basis that might not show up on the 1099-B itself. Now, Fidelity tends to do a better job including everything in the 1099-B document itself, but you still need to verify it. Schwab somewhere in the middle. Then there are two other forms you might receive. You have Form 3922 if you participated in an employee stock purchase plan, and Form 3921 if you exercised incentive stock options. Form 3922 shows your ESPP purchase details, the grant date, the purchase date, the price you paid, and the fair market value on those dates. Form 3921 does something similar for your ISOs. It shows you when you exercise the options and what the spread between the exercise price and the fair market value was. These forms are information returns. They help you calculate whether you have a qualifying or disqualifying disposition, which completely changes how you'll be taxed. This is where people lose thousands of dollars without realizing it. Let me give you a hypothetical example to show you what I mean. Let's imagine someone received 100 shares of their company stock as RSUs. They vested in March, and the stock was worth $50 per share at the time. That's $5,000 in value. Their employer includes that $5,000 in their W-2 as ordinary income, and they pay taxes on it, federal, state, Social Security, Medicare. It shows up on their pay stub. Now let's say they sold those shares the same day they vested. They get their 1099-B in February, and it shows $5,000 in proceeds from the sale, but sometimes, depending on the brokerage, the cost basis field shows zero. If you just hand that 1099-B to your tax preparer without any explanation, they might report a $5,000 capital gain, but you already paid taxes on that $5,000 when it was included in your W-2. So now you're paying taxes twice on the same money. The correct way to report this is to adjust your cost basis to match the amount that was already taxed on your W-2. So the $5,000 proceeds minus a $5,000 basis equals zero gain. That's what it should be. This is called a basis adjustment, and it's one of the most common errors I see. Some brokerages report the correct basis automatically, others don't. You've got to check. If you participate in your company's employee stock purchase plan, the tax reporting gets even more complex. There's something called a qualifying disposition that can save you money, but only if you meet very specific holding periods. Here's the rule. To get a qualifying disposition, you must hold the ESPP shares for more than 2 years from the grant date and more than 1 year from the purchase date. If you meet both of those holding periods, the discount you received, let's say 15%, gets taxed as ordinary income, but it's based on the grant date price, not the purchase date price. The rest of your gain is taxed as long-term capital gains rates, which are much lower. But if you sell even 1 day early, it's a disqualifying disposition. Now the entire discount is taxed as ordinary income, and it's based on the purchase date fair market value. That discount gets added to your W-2 as compensation income. Then any additional gain or loss from the time you bought the shares to when you sold them is reported as capital gain or loss. So you've got 2 different pieces to report on your tax return. One shows up on your W-2, the other shows up on Schedule D. And if you don't coordinate those 2 correctly, you're either overpaying or you're going to get a letter from the IRS asking for more information. Now the withholding problem. Here's another issue that catches people off guard. When your RSUs vest or when you sell ESPP shares, your employer withholds taxes using what's called the supplemental withholding rate. For 2026, that rate is 22% for federal taxes if your supplemental wages are under $1 million. If you're in a state like Minnesota, it's another 6.25%. Other states have their own rates. But here's the problem. If you're a high earner, and if you're getting stock compensation, you probably are, you're actually in a tax bracket that might be 32%, 35%, maybe 37% at the federal level. So that 22% withholding, it's not enough. That means come April, you might owe a lot more than you expected. And if you didn't make quarterly estimated tax payments throughout the year, you could also owe some underpayment penalties. The lesson here, don't assume the taxes your employer withheld are enough. Work with a tax professional or a financial advisor who understands stock compensation to calculate whether you need to make estimated tax payments. So what should you actually do with all this information? First, make a checklist. Log into your brokerage account, whether it's Fidelity, Morgan Stanley, Schwab, whoever, and download everything. Get your 1099-B, get the supplemental tax documents, get Form 3922 if you have an ESPP, get Form 3921 if you have ISOs. Second, compare your W-2 to your brokerage statements. Make sure you understand which stock compensation income is already included in your W-2 and which transactions are being reported on your 1099-B. Third, don't try to do this alone. If you've got significant stock compensation, work with a CPA or a financial advisor who specializes in equity compensation, someone who knows these details. And finally, if you haven't already, set up quarterly estimated tax payments for 2026. If a big chunk of your compensation comes from stock grants, those supplemental withholding rates probably aren't covering what you actually owe. If you found this helpful and you want to make sure you're not overpaying on your taxes this year, we can help. At Perspective 6 Wealth Advisors, we specialize in working with professionals just like you, people with stock compensation who want to maximize their equity and build a plan for financial independence. As a certified financial planner and equity compensation associate, I've helped clients successfully navigate these exact issues for over 25 years. Schedule a vision call at our website or download one of our white papers on stock compensation strategies. You can find the link in the description below.